One of the things that I was most excited about and that we've been talking about a fair amount is affordable home loans. Why now may be a good time. Given the threat of some changes in not only values but maybe the future of home loans, there have been a couple of dramatic changes this week in FHA financing.
FHA, Federal Housing Administration, just came back and announced that they're going to lower the monthly mortgage insurance premium. So for years they were at 1.35%, and they just recently announced, starting the 26th of January, they're going to drop that to 0.85%.
That's this next week is the 26th.
Correct.
And mortgage insurance, Kevin, for some of our listeners, could you explain what mortgage insurance does? Mortgage
insurance is there to protect the lender. In the event of a default, the customer can walk away. They'll still have that foreclosure on their record. However, the mortgage insurance will step in and reimburse the lender any losses. For example, easily if you had a house with a mortgage of $95,000, you lost the house and the bank could sell it for $85,000. There's a $10,000 loss there. That can be picked up and covered by the mortgage insurance. The consumer walks away, don't owe anybody anything, but their credit is to be suffered by that foreclosure.
And that's because the lending guidelines cover everything up to 80% loan to value, and what the MI covers is everything above that 80% loan to value. Is that correct?
Yes.
That's perfect. And so what would those savings look like? Let's say we have someone, because I think that right now in our market, and as I get out and I talk with people a fair amount, there seems to be a fair amount of discussion about affordability and affordable homes in Bend. And what does that look like, and what does that look like going forward? So for those first-time home buyers and those people that are trying to get into the market, what does the savings of the PMI insurance look like?
Well, if you looked at a $200,000 mortgage right now, before the 26th, at 1.35%, that's $225 a month on top of your regular monthly payment.
Wow.
That's a lot of money.
That is a lot of money.
However, if you remove that, you're talking, you reduce it to $141 a month.
Oh, wow, that's quite a savings.
A lot of savings there. That's equivalent to a raise like we were talking earlier.
That's right, particularly for people that are on an hourly wage or on a fixed salary. The amount of $100 swinging either way can make quite a bit of difference. And the amount of savings that we're talking about, doesn't that, because of your sort of your income to debt ratios, doesn't that sort of affect that value against your income?
It does. In theory, you take your principal, interest, taxes, and insurance, plus your mortgage insurance. In theory, for FHA, the rule of thumb is 45% of your total income.
Okay.
We can bump that up sometimes depending on the rest of the borrower, how strong their credit and their income and everything is. But if you take away the difference between 225 and 141, that house you couldn't qualify for 2 weeks ago, you can qualify for next week, depending on the rest of the scenario.
So you could buy more house.
Absolutely, that's what it means.
That's great, because as we move forward, finding homes in that affordable range at the lower end are getting increasingly difficult.
It is, as you know, Fred, and doing this as many years you have, is, in 2010, 11, when everything crashed, and you could find a house for 125, 150, and then those went away, and then it went to 175 and 200. Now those are gone. Now that consumer that was hoping to find a house at 200 that's now no longer there, all of a sudden a 250, 275 may not sting as much on that monthly budget.
Because the overall cost, even though the sales price is higher, the actual debt service each month is not much higher.
Correct. Mm-hmm.
Perfect. Well, that makes perfect sense.
You couple that with what interest rates are doing now. There's just in the next week, if you haven't found a house, you need to do one now.
That's exactly right, and that's the reason why I was happy to have Kevin Pangle today from Evergreen Home Loans come in and visit with us. Hello, Central Oregon. Hello, Central Oregon, and welcome back to the Real Estate Revolution. I am Fred Johnson. I'm your host today. And today here in the studio we have Kevin Pangle with us talking about some of the different loan programs and some of the different opportunities that are out there. He's with Evergreen Home Loans here in Bend. Their phone number, in case you want to write that down, is 541-318-5500. You can contact Kevin there at Evergreen Home Loans any day of the week. Kevin, welcome back after the break. During the break we had a call from a party that has an FHA loan currently in process, and they wanted to know how they could take advantage of this new program that's happening. Is that possible for them?
It is. And what happened with the lender they're working with is as soon as they everything's set up. They get what is called assigned a case number with FHA. That case number rides with that property. That can be canceled. That's the key. Is when the case number is ordered, that's the mortgage insurance is tied to that. So they need to contact their lender, tell them they want to cancel their first case number, reassign a new case number, and then after the 26th, then you'll get the benefit of the lower MI.
I see. And would they need to call for another appraisal at that time, or is that something that could be amended as well? Do you?
Yeah, it could be totally amended. Yeah,
oh, perfect.
Absolutely.
Perfect. Well, that's a wonderful, it's an absolute wonderful opportunity, ladies and gentlemen, as I've been sharing with you. And I didn't want to sound too much like a real estate broker that was looking for some business, but at this point in time, there really appears to be, with some pressure on interest rates, but maybe we could talk about that a little bit, Kevin. Last week I shared with the folks that the national indicators were that interest rates could be trending up. And obviously we're in a world economy now, and Europe has a fair amount of impact on our interest rates.
That's true.
But the consensus was that we're seeing some upward pressure, but yet this last week we didn't see that upward pressure.
Well, the experts, and you mentioned the big four, but I always say the experts, whoever they are, wherever they are, that they anticipated rates would be as high as 5.5 going into the summer. So, sure, we're going into February here for long, but what's happened is over in Europe with the euro and everything going on with Greece and everything, the financial problems they're having does have an impact on all of us all around the world. That has actually helped interest rates go down. Okay, now we got to be careful here. That the trend. How long will they go down and how much longer will they stay down? We don't know. But as we saw 2 years ago, we had historic lows lower than where we're going now. And then within a week, rates went up 3/4 to a point.
They went up very rapidly.
Yeah, we had people that qualified, were out looking for a house at one point, rates went up, and they no longer qualified with that price range. It was that drastic. So right now, if you talk to a lender, if you talk to your lender within the last 3 weeks and they gave you a number where you qualified for, you need to talk to them again with rates that have gone down. You may qualify for maybe $10,000, $15,000, or even $20,000 more in price. As you know, that's a lot of house.
That is a lot of house. And would that mean that if you were in the process right now, this would be a good time to lock? Well, if you wanted to lock that interest rate, is that important?
If your lender knows what's going on and watching the rates and everything, I personally feel we're at or below where we've been, for the last 2 years. That I know, but we're very close to the lows. Okay. Where it's going to get, we don't know, and we can't predict that. But you're really close to being at the lows. If you got a chance to lock in at a rate now, I strongly suggest that.
Well, that's the funny thing, everybody, of course, wants to take full advantage of every opportunity that they have, and they want to sell at the absolute high and buy at the absolute low. But the unfortunate thing is, on both ends of the cycle, we don't realize where the absolute high is or the absolute low is until we're past it, and then we don't get to go back to the spot.
Exactly. If you're within an eighth of the low, you look pretty good. Especially 5 years from now, you look back and said, we locked in below 4%, we're in the upper threes, and rates went to 5. Yeah, you look
like a
good.
hero. Yes. Everybody, you look like a hero. That means you can take the family out for dinner one more time a month.
Absolutely.
So, and with that, as we're looking forward, you would concur. I'm just looking for a little validation, if you will, because I've been sharing with the folks here that this is a very, very good time, given the fact that our prices are still basically last year's prices, if you will, and there is available inventory out there, and interest rates are such that with this PM or with this MI and with the lower interest rates and all this, particularly for those people that are first-time home buyers or the entry-level sector of the market, this is a great time to consider getting out and looking at property.
It is a good time, and also we have the zero-down programs are still out there. You have some grant programs. That's a whole other topic.
Well, let's talk about that a little bit.
Well, zero down, if you're a veteran, there's never a better time for a veteran to buy. If you're in a service, you need to talk to your lender. And get you in with zero down. In the right scenario, you can get the seller pay all your closing costs. We're getting veterans into homes with zero money down out of their pocket.
Zero out of their pocket.
Zero out of their pocket. Zero down. We can get the closing costs, the lender pay closing costs, or we can get the seller to pay. Think about it.
Is this anybody with what are they, a DD 214?
Yeah, DD 214, exactly. Yeah, if you're in a service and you got your 4 year, there's certain criteria that meets that, and your lender will walk you through that. But you just need to make the call. That's
Perfect.
the key.
And that's for the federal VA.
That's
is that
federal
correct?
VA. Then you have the USDA zero down programs. That's, in the rural areas, you start going south of Bend, east of Bend, north of Bend. You can get into Redmond and Prineville, all your listeners out there.
Yes.
All those areas, qualify for USDA. Zero down in those programs.
And that's another great program.
Yep.
But it doesn't really work in Bend proper because Bend doesn't qualify as a rural property.
They're called urban. So
I
there
see.
you go. Yeah. And then you still have your FHA. 3.5% down, just like we talked about with reduction of the MI is a good program. FHA will let you get a little more in because your credit didn't have to be quite as good. The down payment can be gifted. So there's so many ways to get somebody into a house. Just got to make that call.
I think that making that call, and once again, if you'd like to contact Kevin at Evergreen Home Loans, that phone number is 541-318-5500. But as in anything, and where I talk about it a fair amount here on the show, is if you're going to get out into the market, everybody represents themselves as a expert in real estate. But to go talk to a professional that really understands the market, is active in the market, they can give you the best counsel and the best information. And if you're looking for some stability and security for your family and purchasing a new home, this may be a wonderful time to get that done.
Well, Fred, I'm going to do something here. I don't know. We didn't talk about
Go
this,
ahead.
but I remember meeting you in the 80s when you were selling the real estate.
I had a ponytail in those days.
And so, I have 28 years experience in this, and how many years you have. So the experts are there, and I think that's the key, just what you touched on.
Well, thank you for that. I think that, and the purpose of our show here too is to try to bring valuable information to our community that they can use. And we'd like to be available anytime. If you'd like to call on a property line, our phone number here at the station is 541-388-1110. You can always contact me off hours, and if you'd like to send me an email through my website, which is just askfredjohnson.com. There's a contact section there. If you have any questions, any topics that you would like us to discuss in the future, any of those sort of things, please don't hesitate to do that. My daughter told me this last week that I say a couple of too many times. So I guess we're getting ready to break because the Duck game is coming on. Is there anything you'd like to say as we part here, Kevin?
You got to make the phone call. If you don't buy now, you're missing the boat.
Well, thank you, Kevin, so much for being here today. We really appreciate it. And thanks to all of our listeners, and go Ducks.